Imagine you've just spent a long month working hard, and you finally get an email saying you've been paid $2,000. But when you check your bank account, only $1,456 is actually there. To figure out where that money went, you have to change your perspective. You aren't just an employee, you are the CEO of your own personal corporation, You Inc. That missing chunk of your paycheck represents your company's mandatory overhead, taxes. This is the price of doing business in a civilized society. The money that funds the roads you drive on and makes sure the local taco truck is safe to eat at. But what about the money that does make it to your bank? Most of us imagine a bank is like a giant high-tech safe. In reality, they are more like a matchmaker. They take your deposit and immediately look for someone else who wants to borrow it. This shows how the bank stays in business. They only keep a small slice of your cash on hand, because they assume not everyone will ask for their money back at the exact same time. They take the rest of your deposit and lend it to someone else at a higher interest rate than they pay you. If the bank is putting your money to work to make a profit for themselves, it's time for you to do the same. As CEO, you need to start giving your money direct orders, so you aren't just providing the fuel for someone else's engine. Every successful business runs on a budget, a plan for every dollar. A simple, effective framework for your personal company is the 50-30-20 rule. This is how you divide your incoming revenue. 50% goes to needs, like rent and utilities. 30% is for wants, things like dining out or hobbies. Finally, the last 20% is strictly reserved for savings and investments. Budgeting isn't about restriction. It's just deciding where your money is going to go before you actually spend it. Following this plan shifts you from reacting to bills as they arrive to actively directing your cash. It ensures that every single dollar you earn has a specific job to perform. As CEO, you have to distinguish between debt that helps you and debt that hurts you. Good debt, like a mortgage, can help you build long-term value. Bad debt, like a high-interest credit card, is like a rogue employee who is actively stealing resources from your office. If you have debt that is charging you more than you can earn by investing, your top priority is to fire that debt as fast as possible. You also need an emergency fund. Think of this as your company's insurance policy, a pile of cash kept safe in a bank to protect you when life throws curveballs. However, you simply cannot just let all your money sit still forever. Inflation is like an invisible thief that slowly reduces how much your money can actually buy over time. A dollar bill stays a dollar bill, but it buys a little less gas and a few less groceries every single year. Saving handles your emergencies today, but only consistent investing can protect your wealth from being quietly eaten away by inflation in the future. To grow your company, you need to hire compound interest. Think of this like an employee who doesn't just work for you, but constantly hires clones of themselves to work alongside them. This chart shows compound growth. Your money earns a return, then returns on those returns, duplicating itself. Time is your most important tool. Starting earlier creates a massive difference, giving those clones more time to multiply. Wealth isn't built overnight with a lucky break. It's built over decades of being patient and owning pieces of the market consistently. Time is the greatest force in finance. By investing early and letting it sit, ordinary people can turn small, regular contributions into a massive 7-figure retirement without any extra labor. Even with a great plan, the biggest threat to your company is your own emotion. When the markets get volatile, it's easy to panic and sell your investments at the exact moment you should be holding steady. This is why many are now using a digital chief financial officer. Modern AI financial agents can automate your strategy, taking the stress and guesswork out of the process. These tools can link your bank accounts, brokerage, and even your crypto wallets into one place, giving you a real-time view of your total net worth. Because an AI doesn't feel the stress of a market crash, it can provide a more objective perspective. It can debate different financial viewpoints to help you make decisions based on data rather than fear. Whether you use high-tech tools or a simple spreadsheet, the golden rule of finance remains the same. Spend less than you earn, kill off your bad debt, and invest the difference monthly. By following these timeless rules and by staying disciplined, you stop being a passenger in your financial life. You take the lead as the CEO of You Inc. and engineer the future you want.